Hey everybody, welcome to a video that I'm going to be doing on the S&P 500. I'm just doing this one on just the S&P 500. I'm going to keep it short and simple. I'm going to keep it clear and concise, or at least as much as I can. So before I get into all of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. This is just my opinion on the market. And again, we're just going to be talking about the S&P 500 here. This isn't meant to be like a big thorough analysis. I'm not going to spend an hour like I did yesterday. And apologies ahead of time. I'm not in my office. I'm not in my regular office this week or next week. And so I'm kind of doing all of these out of my hotel room. So, but it's still important to keep an eye on what the market is doing. And that's exactly what I'm going to be doing today. All right. So I'm starting here in 2008, basically, actually really 2009, really just at the end of the crash, because obviously that was the end of a correction of some kind. So I was just looking at this, putting things together. You can see I've got some moving averages on here, which I don't usually look at. I don't usually look at them. Usually I'm just basically sitting here just staring at just the plain chart with nothing on it. But this time I figured it would probably be okay to take a look at this from from moving averages. I'm looking at a weekly time frame. Really zooming out, and it's important to do that because really in the grand scheme of things, people are kind of getting scared a little bit. People are getting worrisome. They're about ready to drop, but so far, this is just a small blip in the grand scheme of things. I mean, you can see what happened in 2020, right? This happened in February and March of 2020, big drop. And we've barely dropped, and everybody is they're all getting ready to go all in short. And yeah, we might still drop some more. We made a decision, or at least I made a decision, to buy a whole bunch of equity today, and that may not work for me, and that's okay, because when I take trades, I don't take trades that are going to ruin my account if it goes against me. And that's exactly how you should be managing your trades as well. On the Discord server, we're going to be doing a webinar here. I'm planning this afternoon, this evening, to do a webinar on this. And basically, we're just be talking about options trading, common mistakes that people make when they are trading options. If you're not in our Discord server, just throw a comment in the YouTube chat. I've got my eye on it on my other laptop over here. So if there's any questions that you guys have, feel free to ask away. But what I'm looking at here, I'm looking at this as, we've got a clear finishing move here. So this, I can count a 1, 2, 3, 4, 5. There's no real violations of this. It works out pretty well. Let's just take a look. Is wave 3 longer than wave 1? Well, we measure wave 1, trend-based fib analysis. Measure wave 1, we do the pullback. Is wave 3 longer than wave 1? Let me make sure that I'm not doing this on log scale. And we do have a longer wave 3 than we have wave 1. Let's measure wave 5. How long is wave 5 compared to wave 1? Same thing, it's a little bit longer. But I would say, let me just make sure that I've got this right. Wave 3 and wave 5 are very close, but wave 3 is definitely not the shortest. Wave 1 is the shortest. Wave 3 and wave 5 are very similar, but this works out. This works out pretty well. We don't have an overlap. The 4 doesn't violate the 1. This works out really well for us. So I'm counting this as the beginning of that move. Then we have a correction. Nice little correction here. Okay, so we have a correction. I'm counting this as wave 2, a big wave 2. The target for this, and keep in mind, this is from all the way back in 2011. In 2011, the upside target for a wave 3 would be 34.82 to 38.34. That is really your upside target for a wave 3 based on this 1, 2. I'm sure if we were sitting back here in 2011 and I said we're going to go up to 3,400, 3,500, you'd probably say that I'm crazy. Because back then, the chart looked a lot like this. Chart looked like this. And for me to say, yep, we're going to go up to 3,400 when we're sitting down here at 1,000, again, you probably would think that I'm a little nuts. But so far, look at what's happened. It has so far worked out pretty well. I'm gonna stop right there. Okay, back to where we were. So we've got a 1, 2, and then, we've got a nice little leading diagonal here into the 1, a little 1, 2, 3, 4, 5, a diagonal here into wave 1. Let's just go ahead and throw this in there. So we've got this guy here, and then we've got this guy here. We can pull that down. It's right there. It works fairly well. A little diagonal here into the 1, 2, and then a nice 1, 2, 3, 4, ABC into the 4, and then we roll up to that wave 5. Wave 5, which would be our wave 3 of a lesser degree, right? So we're not talking about the yellow 3 yet. We're still basically on a 1, 2, 1, 2, 1, 2, 3, 4, 3, A, B, C into the 4. Then we go up for this wave 5. This wave 5. Because this can't be a 1, 2, it just doesn't work. It doesn't work that way. So the only other thing that this could be, let me just throw this out there, only other thing this could be is an A, B, C, and then we finish this move. So this 4 might be back here. I could see that being a possibility. But I tend to believe that this is an ABC into a 4, at least for right now. So then we finish that 5. So then we've got our wave 3. Now, the bigger problem here, we're looking at a weekly chart. We are looking at a weekly chart. And I have appropriately named this the bearish scenario because I'm going to be putting on some bear goggles here and I'm going to be looking at this. If we are going to fall, where are we going to fall and how far are we going to go? And so now I'm going to move the chart to the left a little bit so we can kind of see what I've projected here. All right, so I've already prepared this ahead of time, which I usually do not do. I'm going to go to a daily time frame, and I'm going to turn on some moving averages. All right, I'm going to put the 50, the 21, and I've got the 200s on here. Let me see if I can get the 100 on here as well. I think I've got the 100 disabled. So let me turn on the 100. I'm going to turn off the 200 simple and the 30 simple. I'm going to keep my eye on the 21, the 55, the 100, and the 200 exponential moving averages. All right, let me just close this up. All right, so again, if we are calling this the 3, all right, if we're calling this the 3, that means we're going to be going down for a 4. And again, we were looking at the weekly. This is too fast to be a finishing correction. It's too fast for it to finish that move. All right, again, going all the way back here. My machine's running a little slow, but going all the way back to 2011, this is way too fast to be a wave 4. All right, so again, we've got a 1, 2, 1, 2, 1, 2, 3, 4, 3, ABC 4, and then go up for the 5. All right, go up for the 5, which completes the 3. That means that this would be the A. We'd be going up for an expanded flat for a B. And I've already got this all worked out. And it's kind of hard to see. But basically, this guy right here, I've currently pegged up here at the top. This wave 4 could come back down to 25.71. If we are going to see a big collapse, if we are going to see a big move down, this is where I'm going to be looking. Now, what do I have to see happen in order for me to become very, very bearish? For me to become bearish, a couple things need to happen. I'm going to zoom in right here. We're going to take a look at this guy right here. What you saw is your 21 exponential almost crossing inside of the 55. Didn't happen. We bounced back. That was good. Here we had it bounce and went down, and it crossed, and then it continued to sell off. Eventually did recover. But if I see this 21 cross into the 55, I'm going to start becoming moderately bearish. If I see the 55 cross the 100, which it happened right here, mean reversion, it reverted back to the mean. Of course, that's what moving averages do. The price tends to gravitate back to the mean. It's called mean reversion. But this is where I'll become bearish. I'll be looking to short a rally, and that, again, would have worked out pretty well. But I need to see that. And so far, things still actually look pretty healthy. Things still look pretty healthy. So let's look here on the daily, right? So this is September 2nd, right? September 1st, September 2nd, right here. This was that quote unquote top. We had a big pullback. We had support here at the 100 exponential on the daily. We had a nice big rally, and then we pulled back again. So we're talking about this. We've been looking at this on a different chart as being a nice corrective move that finished. Then we go up from there. We've been trying to count this. It just kind of has moved sideways. But what has happened as the price moves sideways, these moving averages have the opportunity to catch up. We lost the 21 exponential here, but we found support at the 55. We lost the 21 exponential, we found support, and we recovered. We lost it again, we tagged it again today, okay? And when I say today, I mean tomorrow, because this candle is new for tomorrow. So this is tomorrow's candle that has already started. You can see there's 21 hours and 27 minutes left in that candle. So if we lose the 55, I will become pretty bearish. I'll be honest, I'll become pretty bearish if we lose the 55. Until we lose that, we had support here, we had good support here, and we bounced up. If we lose that, I'm not going to be looking to buy again until we get down here to 36.89. If I get stopped out on all of my positions, which I hope I don't, but I might, I'm going to be waiting until we get down here to 36.89. That's going to be my next place to try. Okay, and again, you can just take a look at this. Last time we had that that test of the 100 exponential on the daily, it tested 1, 2, 3, 4 times across 5 different days. It worked out pretty well. Good rally. We pulled back again. All right, so we had a nice big push down. We actually lost the 100 for a while, but we recovered, and it recovered well. And obviously that's what kind of took us to where we are. We retested that 50 exponential here. And again, I'm not looking at Elliott wave right now. I'm just looking at moving averages. How do I know when we are pivoting to the downside? Well, you first start to look for lower, slower moving averages moving up, while the faster moving averages are curling down. So right now, again, the 55 exponential is still moving up a little bit, but that 21 is moving down. All right, so we really need to overtake this 21 exponential on the daily. We really need to overtake that. We're watching this guy right here, which is that 55 exponential, which we've already bounced off of in after hours movement. Let's take a look at the weekly. Okay, because the weekly is also going to be pretty important for us. Let's take a look at what our moving averages look like on the weekly. All the way down here at 36.92. That would be the 21 exponential on the weekly. 36, actually it's 36.91.50. Let's compare 36.91.50. 36.91.25 is the 100 exponential on the daily. The 100 exponential on the daily is 36.91.25. And the 21 exponential on the weekly is 36.91.75. They're 50 cents apart. It's not a coincidence. Let's look at the 3-day time frame. 3-day time frame. What does that look like? Well, we are attempting to test the 3-day 21 exponential at 37.79.75. Are we going to test that? I mean, I hope not. I don't want to, because I do have a bit of a bullish bias. But if we reject that, I mean, this is another great example. The 3-day, okay, the 1 day, the 3-day, and the weekly are really important for long-term trend analysis. So this is why I'm currently still a bit of a bull, because we're currently still trading above some of these important moving averages. And we found some support here back on the 28th of January. And we're trying to test it again. We're not quite there though. And we don't have to, because again, on the daily, we are basically retesting that 55 exponential perfectly, right? So that's 37.93. What's the low? 37.93.50. We're up by 50 cents. Back here, that price went down to 37.85, and it was right there around 37.85. So these moving averages are very important, and we're looking at high time frame, right? We're not looking at 5-minute charts. If you look at like a 5-minute chart or an hourly chart, it's going to look like garbage, because we've had nothing but chop. I mean, look at this right here. Big up, big down, big up, big down. This looks like chop. There's nothing constructive yet until we break down or we break up. If we overtake this 21, I will feel much better about my equity positions that I took. If we break down below that 55, chances are pretty good everything's going to get stopped and we're going to be looking for lower prices, and I will be looking for a move down here. Do I want to see that happen? Obviously I don't, but it happens. It happens. We live to see another day. And that is what we strive for. We live to see another day. So all in all, if this does work out, right? So we were just talking about this, right? If this is an A and then a B, and then we go down for the C, let me move this back over here again. If we're looking at a C down here at 25 to 2600, what's our upside target? Well, let me go to a weekly time frame and just show you what I've got outlined here. If we do get that deep pullback, yes, it will suck a lot for equity positions. You basically are only going to be able to make money playing bear assets, or you're going to be playing maybe some call credit spreads, or playing some short-term puts on assets. But if we get that pullback, our upside target, we're really not looking at 4,000 to 4,200 anymore. Our upside target is going to be $5,300. 5,300 on the S&P 500 is where we would be targeting if we get that pullback to 2571. If we get that pullback to 2571, what's our return on just an index? That's 100%. 100%. If we get that, I'll be taking that trade. You better believe I'll take that trade. If we have just topped out a couple weeks ago, right? 2 weeks ago. If we just topped out 2 weeks ago, and we do go down from here, and we break down through all of these moving averages, which should provide support, right? They should be providing support. But if we break down below, I'm going to be looking for this 618, this zone down here, and I'll be looking to get really heavy, probably in just indexes at this point, and be able to ride that up. Sure, there's going to be a lot of different stocks that are going to outperform indexes, as they usually do. But I'm going to be looking to be pretty heavy into high dividend stocks. There's a good high dividend ETF. I'm trying to remember what it is. It's SPYD. That's your high dividend ETF that is based on the S&P 500. That's one that you could take advantage of, and not making any recommendations, but just kind of throwing that out there. But this is all based on the fact that this happened very, very fast. This happened very fast. Unless I've got this count wrong, right? And then if we've got this 5 right here, remove that, right? So if we've got the 5 right there, so we've got the 3, the pullback for the 4, we go up for the 5, that 4, if that 4 is there, and that 3 is here, well, then it very easily could be that we've got an A, a B, a C, in which case that correction is done. We go into the 4, then we see higher prices. But what that means then is we're just in wave 1. We don't know where wave 1 is going to end, but when it does, we're still looking at a pullback to 34.33, 31.44. We're still looking at a potential pullback if we have topped out. And again, I've already discussed what I'm going to do when certain things happen. I'm going to be looking for that 55 on the daily to break. If we break the 55 on the daily, that is not a good sign. Honestly, it's not a good sign if we break that. Really, I don't want to break this low on this right here. This is going to be that first level where we're going to see some kind of bullish invalidation. Once we start breaking below certain levels, and I've done this exercise before, we're going to be watching all of these levels that provided critical support previously. If they break, it's not good. It's not good. We don't want to see that happen. And again, I'm just kind of looking here at daily candles. This level right here is pretty important. So we'll be kind of keeping an eye on that guy right there as well. So all in all, that 55 exponential on daily, it's got to hold. If that breaks, again, we're talking about ourselves moving down here to 36.91, which is the 100 exponential on the daily, and I believe it was the 20-minute exponential on the weekly at 36.91.75. that is where I would look for the next level of support if things break. Right now, the weekly candle, we're only a couple days in, right? This is Wednesday. So we're only 3 days in. We still have 2 more days, but this candle doesn't look terrible, okay? A lot of you guys like candles. Let's just look and see. The last time we had a candle that looked like this, let's see if we can find one. Here's a good one right here. Long wick on the top, and we've got a body, a red body. Now, obviously, this isn't done yet, right? But after that, we had a good follow through to the upside. Here's another one, long wick on top, little red body, follow through to the upside. So that could be seen as a good thing. It could be seen as a good thing. I'm just trying to see here, long wick on the bottom, small red body, and then we went to the downside. But here's another example where it didn't happen that way. So it doesn't mean that it's going to happen that way. But nonetheless, in my opinion, that candle doesn't look terrible. So I'm not going to be super bearish, but I have to keep my eyes open to all scenarios because it might happen. And I don't want to be unprepared if it does happen, which is why we always discuss on our Discord server why it's important to manage your risk, and why it's important to be a little more conservative, especially in times like now, where we look like we might fall. I took a big bet today, buying a bunch of things, and with the hopes that we do recover through the rest of the week and into next week. I think we will have a green week next week. We may not have one this week, but I think we will next week. And that's why I did what I did today. All in all, that's my opinion on the market. And let me just kind of zoom out so you can get one last view before I close down the video. Again, this is on the weekly time frame, going all the way back to 2009, basically, 2009, and looking to see where we could potentially be going. And again, that upside target is going to be sitting right up there, about $5,000. And I think that is potentially where we could be heading. But again, we have to keep our bear goggles on just in case something bad happens. All right, guys, I'm going to go ahead and stop the video. If this video did help you in any way, shape, or form, like, subscribe, share, all that good stuff. And of course, wherever you are in the world, I hope you're having a good day, a good night,